there's a when we have implied volatility that's pretty high, right, relative to historical numbers. So let me digress just a little bit. We're going to just touch on what the concept of Vanna. So the Vanna is the change in delta due to change in volatility, right? And as it turns out, when you hear Jem Carson and others talk about a Vanna rally, Vanna rallies occur under a special set of conditions. And Don, I don't know if you know this, but you were just describing one of the conditions that it occurs under, right? A Vanna rally occurs when we have high implied volatility, right? And we've got just a huge amount of puts, right? The market sentiment below us has been such that and a devoid of calls above us. And market sentiment below us has just been pound the puts, right? Just pound them, pound them, pound them, because everyone's making money as the market collapses. Volatility goes up through the roof, right? Okay. Once that volatility gets to a level, whatever it is, there's a very big differential between the implied volatility and the realized volatility, right? So the front of the curve, the structure tends to favor a fairly steepening of that level. And what you're asking is to characterize the percentile that's in. Now, Vanna actually plays in our favor in that condition once things start to shift. And we talked about, let me see if I've got it here.
Yeah, because bear market rallies are incredibly fast and incredibly strong up.
Yeah. So, yes, exactly. They are. So this is up here in this upper corner here. This is VIX. Let me just go ahead and make this full screen. All right. So this is today's VIX. This is yesterday's VIX, right? And you can see it reset this morning. So it starts at 3:15 in the morning, New York time, and then today it more or less relaxed down. Why this is important is that as we come off that high IV rank or high IV implied volatility, the behavior of Vanna is like this. Let me try to describe it. And the analogy I like to use is with a balloon, right? So what happens as volatility was actually going up, like what's here on the left-hand side here, when volatility goes up, what we tend to do is we squash the magnitude of the effects of Vanna down. So we've got increasing volatility here as indicated by VIX futures. And what happens is we actually are decreasing the 1% change in volatility, the effect that it has on delta, say for the SPX. But what we're doing is we're spreading it out. So if you think of kind of maintaining the area under a curve, think of a rectangle, and I can either squash the rectangle and make it high, or I can flatten the rectangle and make it wide, right? But the area remains the same. That's how Vanna effectively works. And so what happens in this volatility, when volatility is going up, we're squashing the magnitude down and we're spreading it out. And that's why when markets are starting to sell off, you have more volatility, right? So you have Vanna that's contributing to more downside deltas. And actually, it turns out it's more negative on the left-hand side of the Vanna curve. And so now people are putting puts down there top of the Vanna, which is already starting to get further and further, have downside effects. And it just becomes this, self-perpetuating feedback loop that reinforces itself. Now we get to the top. Now we get up here. Volatility is dancing around. We're at this high IV rank, right? And we're doing whatever we're doing. And then, for whatever reason, the market starts speculating in different ways, right? They start opening calls, they start closing some puts, whatever the case may be. I don't care what it is. As volatility starts to come down, that flat rectangle that we were just describing, we now start squeezing it this way, which means the change per 1% starts increasing, but it does so over a smaller range of strikes. Why is this important to us? Well, it's centered about zero, meaning you've got a left-hand side and right-hand side. So we're kind of squeezing with the center of the rectangle in the middle, spot price. But what are people doing as volatility is coming out and as the market starts to stabilize a little bit and the start goes up? They start buying calls. The right side of the Vanna function, the thing that we're interested in, is positive. It's positive delta. So we got two things that are going on in a Vanna rally. We're kind of squeezing this and we're making it taller. So we're not affecting a whole bunch of strikes to the upside. People are already closing the left side. They're closing those negative puts, right? So that has its own thing. It's not Vanna, but the effects are less and less because we're closing those puts where the Vanna would have an influence, but there's less OI there. So that just exacerbates that, right? But the call side of this is really, really important because what we're doing is we're buying new calls, we're pouring gasoline on a fire, and prices are starting to move up. And as volatility comes down, you can see there's a couple places today where volatility came down. I bet that those are periods where the price started really taking off, right? And so that becomes that very powerful Vanna rallies, which you're talking about here, just to tie all this together in the story. When we come off this high IV rank, right, you're in the 95th percentile and you start moving down. If you start seeing, and I want you in your analysis to kind of keep an eye peeled for this, if you start seeing that call speculation line of the right-hand plane go in, you have a pretty good chance that now, because you've got both volatility of the instrument coming in and you've got that right-hand plane coming in at the same time, which is a measurement of the call speculation. You're going from an out of the, or you're going from a left-hand plane dominated line to a right-hand plane dominated line where the out of the money calls are starting to really weigh heavy on the in the money puts. All of a sudden you've got all the fuel, everything, and the spark necessary to really rally on that stock. And I think that could be a very, very good signal. And then depending on what GEX ratio is, that could just be another, paste, little bow tie on the top of the whole thing.